Let's go. All right, awesome. So in this video, we are going to be talking about the two strategies that we use. We're going to just start by getting our notes and jotting down some parameters, like some measurements. If price doesn't do these certain requirements, then that's not a trade that we're going to be taking. So the first pattern is going to be called the bat pattern. And what we're going to write down is measuring from point X to point A is going to give us point B. And that is going to be equivalent to 50% minimum and a maximum touch. So that's one whole line that we'll go ahead and write there. And then on the next line, we're going to write point A to point B is going to give us point C. Now that is equivalent to a 50% minimum touch to a maximum of 100% of point A. And I am going to show you how this looks on a chart, on a live chart right after here in a second. On the next line, we're going to write from point X to point A also gives us point D, which is equivalent to 88.6%, which is also going to be our entry point. Now, our stop loss is always going to be just past the 1.13. So that is basically the formula, the measurements for this first pattern. Now, what we're going to do now is go on to like a live chart so that we can see what that actually looks like. It's NZD, the New Zealand dollar, and the Swiss franc dollar, because right now that it was on the 1 hour that it's like both of our strategies examples are like all right here on this exact same pair. So that'll be, nice for us to see. Make me a little bit smaller. Okay, so I'm gonna come back here. I'm gonna squish everything down so you can kind of see. I'm going to be focusing on this pair. This is where price is currently at right now. Today is May 19th. I'm going to come back to right here because just looking at my naked eye, if you can measure, you can trade, and you can easily pick up this skill, because all this strategy, all this is measuring. So going back to our notes, this very first example is going to be an example of when we would sell the market. So the bat itself, those notes that we had taken earlier, they can either be bearish or bullish. So if it's bearish, we're going to be looking for a minor sell retracement, or it can even sometimes even lead to a continuation pattern, but overall we're looking for a sell. Now when we're looking for a bullish bat, we're looking for a little bit of a retracement for price to go ahead and come right back up. So in this first example, we're going to be looking at the bearish bat, and that is us looking for a sell example. So when we talk about those points on our notes that we had written down, points A, X, A, B, C, what that is referring to is significant highs and lows. So if I, zoom out a little bit more, we can't really read the candlesticks, but for the example, right here, we can see that that's a significant high, that makes a mountaintop right here. This is a significant low, as well as this. This is here, this is as well, and this is here as well. So those are all significant points. And when I'm talking about X, A, B, C, and D, I'm looking to measure those points and to see, what relationship or what measurement they are towards each other. So in a significant high right over here is going to be this one, because it's the highest, at this point in time right here. So I'm going to come over to my Fibonacci tool. This is going to be my starting point. That's going to be my X. So I'm going to, wicks do matter with this strategy. So I'm going to take it from the very wick of wherever the top of this is, and I'm going to bring it down towards price. That's because price is making its way down. And I'm going to put it right here at the bottom of here, because that's what I'm measuring from the top here. The way you read the Fibonacci, as a matter of fact, too, let me just go ahead and open up the settings so that if you want it to match yours, these are the most, well, let me take off this 2.6 because those are irrelevant right now. We don't really need those. But these 100, 38.2, 618, 1.13, possibly the 100, 114, negative 13, negative 414, negative 272, 886, 1272. And these ones right here are the most significant and important ones. So keep those. There's not the extensions, the colors, as far as like 1.13, 414 and 272 for those being red. I keep those red just because those are the extension levels as far as where I'm looking for price to go ahead and have a reaction, or like my zone whenever I want to do zone trading, just that strategy. I keep those highlighted, the rest black, and then this 618 being blue is not necessarily super significant, but it does add a break of color just to the eye when I'm looking on here. So the way we read this is, so from this point starting up here, X, bringing it down, I'm looking for price to give me a retracement, which is coming back towards the opposite way of where it was going. For this pattern, what we wrote here from X to A is going to give us our B. So since we have this as our X point, this is now identified as our A point. We need to figure out where the B point is. And a minimum, it needs to come is to the 50%, a maximum to, and a minimum and a maximum. So we can see from here, price, let me switch this over to a arrow. That way it might be a little bit easier to see. So here we started from here. Price made its way down to here. And we're looking for it to come up to a minimum of the 50, also a maximum of the 50%. So from here, just take this arrow to show you too. So from starting here, I need price to come down to here. And then I'm looking for it to also come from that point. Here's the 38.2. I need it to minimum come up to this 50% right here, which it did right over in here. That's also a maximum of where I wanted to. So here, if this came up anywhere and touched this blue, then it is invalid. This pattern and this strategy no longer works. We just throw the whole thing away. So the fact that it did stop right here at this 50 and didn't touch the 618, we can look for that to possibly be our B point. So let's take these arrows out the way since we kind of already know where we're looking. Okay, so let's take this Fibonacci off because we're going to come back to that for a second. I'm going to get another Fibonacci tool. And now for us to find our C point, we wrote here in our notes from point A to point B is going to give us our C. So since this was our X, this is our A, this came back that 50%. This is possibly looking to be our B. For us to confirm it, we need to make sure that from this point on to wherever it decides to retrace to, in this example, we're looking for it to retrace downwards a little bit. We need it to minimum come to about 50%. So we're going to take the Fibonacci from this very wick right here, since this is our A, and bring it up to wherever the highest wick of our B point is, which is right where this wick is right here. I'm going to drag it over so we can read the numbers a little bit better. Okay, so remember we came down from here and we measured it up here. So now I'm looking for price from here to minimum needs to come down to 50%. And look at where it did right here. So if it would have stopped right here at this 38.2, it is invalid. That is no longer our strategy of the bat pattern. And a maximum that it can come to, it says, is 100% of A point. So what that means is, remember here how we're reading the Fibonacci to know where it starts from is wherever the 100% is. So since this is our A point, that means that this starting up from here is allowed to come minimum to 50, maximum can come all the way down to this 100%. If it comes just a little bit right there, it is invalid and it's no longer going to be a bat pattern. We just get rid of it. So it can come as far as up to here for it to still be valid on for our strategy. So now we did meet the requirements. It's at the 50. So now we've identified our C point. We can go ahead and get rid of this. And now we're going to grab our Fibonacci tool again. And we need to now find our D point. And on our notes here, from X to A, the same way what we started with, this point being up here is our X, coming down to our A, dragging that over is going to give us our D point. And here that is the 88.6. So the way that looks, if I grab this pattern tool over here to the left, I'm going to take it from X. See how it already has my X right there? I'm going to bring it down here. That's my A. Bringing it up here to my B point, 50% minimum and maximum. My C point developed right here at the minimum of the 50. And my entry point is going to give me right here at this 88.6, which is going to now be my entry of my D point. So now to find the stop loss and take profit, we're going to come over here and grab our risk to reward. Sorry, this one down here. And it's a short position because we're looking to short the market. Our entry would be right here at this 88.6. And the risk is going to be just past the 1.13. Let's do right at 60. So that's our stop loss. Let's get rid of this so that it's much clean when we can see it. All right, so in order to find our take profit, I'm going to get another Fibonacci tool, and I'm going to bring it from the wick point of C, and I'm going to bring that up to wherever the highest wick point of D, wherever D point starts, which is right about right here, right? So my take profit 1 is this 38.2, which is kind of right where my green area for my reward stops. So right now with this particular trade, we're looking to risk 60 pips in order to gain 47 for take profit 1, and 67, oh well, a little bit more. Looks like about just shy of 70 pips in order to get take profit 2. However, you can see that if you would have twin traded or had multiple trades running and had like one to set take profit and then one to like keep it running, this did come all the way down right over here to just over 200 pips in total. So that is the bat pattern for the bearish bat if you're looking to catch a sell retracement. Now the exact same patterns and measurements apply to the bullish bat if you're looking to catch price to come up a little bit, make that run up. So I'm gonna, because it's, remember, everything is on the same chart, I'm gonna zoom out a lot so we can see much more data. Just want to make sure we can see everything in here. Make me a little bit smaller. Okay, so again, remember when we were talking about X, A, B, C, and D, we're talking about significant highs and low points. So over here we can see this is a significant high, this is a significant high, this is a low, this is obviously a low, this is a low, these are lows, these are lows, these are lows, right? So with the bullish bat, doing the exact same measurements, but I'm going to be coming from X being the bottom up to where the top is when we did the opposite, when we were coming from the top to the bottom. So I'm just going to choose this low right over here. And remember, I need wicks do matter. I'm taking it from the wick here, and I'm going to bring it to not this high but this high, because this one is higher. So this is the next and most significant high. This one's lower than this one, so this is the one that I'm going to use. And I'm going to bring it over so that we can read the numbers in comparison to where price is right over here, right? So this is the high that I'm bringing it to, and I'm going to drag it over, and I just want to make sure that it's as precise as I can get it. So right there is my high. So now here in our notes, remember when we were trying to find our B point, we're going to be taking from point X, which is where we started, and we're going to be taking that up to point A, which is right here. The one we used. We're looking for our B has to come to a minimum of the 50%. So from here, this came down and it hit this support area right here. What I love about the Fibonacci is that you're actually able to use Fibonacci as support and resistance in addition to, you know, major key levels of daily zones, key zone, weekly key zones, and monthly like zones. So in confluence with those larger areas as well. So from here down to here, that's 38.2%. That's not what we're looking for. It needs to be a minimum of the 50, right? So price comes right back up and it plays around, but right here, just a couple days ago is where it finally did now hit this 50% mark. So again, we started from here. Price came all the way up. We measured it up to right here where this point is here. And then from there, we measured it down, and it needs to come to right here, minimum of this 50% for us to be able to take it or consider it valid for us. So let's get these out the way. And we are actually going to take this Fibonacci off because we've identified our X, our A, and our B point. Now we're looking for our C point. And again, our C, we're going to be taking our point A to our point B, and that's going to give us our C, which is a minimum of 50%, maximum 100% of A, right? So here was our A point, taking it from that wick right where it stops, and I'm going to bring it down to where this this B point finally finished, which is right at the wick right here. I'm going to bring it over so we can read those numbers better. And remember, from coming from this point to this point, I'm looking for it to minimum come back up to a minimum of this 50%. The maximum that it can come up to is 100% of this point right here, A point. So the minimum has already been hit right here at this 50. It came up, hit the 50, and the maximum, so like even right now, it can still push up as far as right over here, wherever this 100% is, because that's 100% of this point right here, A. So that is, if you're looking to catch this from the C point down to where our entry point would be. So let's go ahead and figure out what that would be next. Grab our Fibonacci, and again, it starts from the beginning. We'll take this from X all the way up over here to where A is. And our entry point, I'm gonna grab our tool, our harmonic tool, start from there, X, bring this to A. This is where our B point actually was. This C point, remember, has to stop a minimum of 50, but it can push as high as up to right here where this 100% of A is. So I'm gonna just go ahead and drop that there for now. And our entry point is gonna come right here at this 88.6 area, which is our D point. So now what is our risk to reward? I'm gonna come over here to a long position. I'm going to set this right here. I'm going to move our C because price can potentially push back up to here. So I'll keep note of that in my mind mentally. However, when I'm looking to set my order before this actually plays out, so that way I don't have to stay in front of the chart until to see when it does actually happen. Geez, sorry. I'm going to bring this C to where price is actually at now so I can go ahead and get my measurements. So now I'm going to get rid of this. Oh, sorry. No, yeah, I'm going to grab our long position. We're going to, oh yeah, we set that there. And we're going to bring our stop loss just past the 113. And now let's go ahead and get rid of this Fibonacci for now. So again, because price is only right here, we can only go off of what we can actually see. I'm going to bring this very top point from here, and I'm going to bring it down to where my entry should complete. However, when price actually does get to there, if it does push down a little bit further, I need to readjust my take profits by, measuring from C down to wherever it did, that wick does actually touch. So, but for right now, until price gets there, we're going to leave this right here at that 88.6. And we're looking for a push down anywhere within this range of where C can come up to, remember, which is right where that 100% of A is. We're looking to take that down to here, the 88.6. And then from there, I'm looking for a pullback, take profit 1 of this 38.2, take profit 2 of this 61.8. So let's go ahead and adjust our target. So for our first trade, we're looking at a 1-to-1. We're willing to risk 132 pips in order to gain 134 for take profit 1, and as much as 223 for take profit 2. So that is the exact same example of the bat, just in the bullish form. So you could go ahead and enter in those pending orders, sell limit for the very first example of the bearish bat, and then a buy limit for this second example of this bullish bat, right? All right, so